Hello everyone, and welcome to the Profitability Market Overview. Today is February 2nd, 2014. And we're going to start off by looking at the monthly chart of the euro. And we still seem to be in this correctional pattern. It does look like the range of the correction is getting smaller and smaller. So it looks like at this point we're still above the alligator, but there's a good possibility that it's going to come back down and continue in this B-wave triangle looking or complex correction. So let's go to the daily chart where we're trading, and you can see that this recent pattern's been very choppy. We did have a three wave of some degree here, small correction down, and then a fifth wave here, divergence between. Now it appears we're in a correction down. The fractal sell was just hit on Friday. So if you're short, it's not clear how far this is going. There's a good possibility it may come down to this previous fractal area of what was on the weekly. So I would keep a fairly tight stop, possibly even a trailing stop, considering that the market is in a correction, and just lock in some profit after it continues down. We don't want to have big ranges here based on there's not a real clear direction on the weekly or the monthly, and we know that on the daily we are in a correction. So once it hits the bottom, it turns around very fast. Next market we're going to take a look at is going to be the Japanese yen. And we can see here on a weekly chart looking at this, we've had a big, huge 3 down, a 4, and a 5, fifth wave of this wave that we've had down. Looks like an ABC. So on this move now, market is going up and correcting, which is expected after having the divergence on the weekly chart. And here you can see a much better picture of that, of 3, 4, and a 5. Now we did not have a C wave up that we expected. This market just went down and took out that previous low to complete this sequence of waves. So we have a 5-wave move complete here. We're now going up into a correction. Don't know how far it's going to correct, but again, in these corrective markets, I like to use tighter stops, not using green line. So if you're long here in this market, I would keep a stop somewhere in this area so that you're not going to have a significant loss in case it pulls back. And there is another bifractal that's available here, so depending on the risk, that may be something that you want to add on. But again, we are in a correction, don't know how far it's going to go up. So do be cautious. Next market, one more currency. Today we'll look at the Australian dollar. And we can see here, let's go up to a monthly and take a bigger picture. We see we had a nice big impulsive move up, and we are in the correction now. Looks like the C wave down. So when we go back to the daily, that's what we're looking at. Gives you a little bit better idea of what we're looking at here. We have taken out the previous low, so in C it does look like we could have another low coming down. We have some divergence, but that doesn't mean it's over. Alligator is turning up, but this fractal sell on the bottom, again, if the risk works and this market's going to take another 5 waves out from this one, it might be a good possibility. This is a slow mover, not too volatile, so here you can use a little bit looser stops than you would in, say, the yen or the euro. Okay, the next market we're going to take a look at is going to be gold. And here's our monthly chart on gold. You can see that we're still in this correction. We have not taken out that previous low. So we do feel like we're going to see more lows here, even though it's been a little bit choppy over the last little bit of time. On the weekly chart, you can see that we had our peak here, and that we had an A, looks like a B, and this is a C. Still expecting one more low unless we have an irregular C here and it doesn't take out that bottom. But typically C's do follow that pattern. So I suspect we are going to see another low coming in. And the silver chart, same thing here. You can see that we have a correction that's retraced 50%, much more than gold has, of the previous move. So with silver, we're still looking for that next low in as well, and then possibly seeing this market head back up and starting a whole new sequence. So silver on the daily chart has been very, very tricky. We've had large range bars. We're absolutely in a correction when you look at this type of behavior. So when the market is in this type of behavior, we want to be cautious. There are some fractal sells here, but the risk is quite high, so you may want to look at the E-mini even though the volume's not the best. Otherwise, you may want to just stay away and only trade gold if that fits your risk parameters better than the silver. Good possibility that we're going to have a low that takes out that low, but we don't know how much more. So if you're already short now, I would keep a stop in somewhere comfortable, not give up too much profit, and see where this market wants to go. The sellers did close it on Friday, and the AO is below 0 in red, so alligator's open. So everything here does say this market can continue down, but we are in a correction, so anything can happen. Next market we're going to take a look at is going to be crude. And crude's been a little bit difficult, kind of a rough rider, even though we've had a strong move down, fast move up, really fast move down on the bottom. And let's take this for a minute and have a little bit of a lesson here for those that are new joining or just to refresh on angulation. A lot of times when we're looking at this bullish divergent bar here at this moment, and we're talking about angulation. In the past, I mean, this is pretty obvious, but you would look at where it started to where it ended, then we'd go between the red and the blue lines. Do we have angulation? It's a little more difficult. I have found a much easier way to do it, and that is by looking at the market from when the price comes out of the alligator, and you start looking at the distance. Since we're looking at a bullish divergent bar, we're looking at the highs, so the distance between the high and the alligator. High and the alligator, and it gets further and further away. So at this point, you can see the distance between the high of this bullish divergent bar and the alligator is huge. Think of that as that rubber band effect. And it wasn't a 1-1, but the sellers were mostly in charge. So we had a fast move down. It's crude, bullish divergent bars. So that was a pretty good sign if you were short to get out and take your profit. 5 ticks above the high, give it a little bit of room here. If you are a counter trend trader and that risk was comfortable, that also was a place that you could have gone long as well. So we're looking at angulation, the distance between the price bars and the alligator, and the further away they are, the more angulation there is. Like example here, these price bars almost have no distance between, so we would not consider their angulation. Here at this point, there is angulation. Here at this point, there's some angulation. Now, as soon as this next bar comes through and takes the low out of that bullish divergent bar, it's no longer a valid bullish divergent bar. So if you were using it as an exit stop, you could still stay in there, but theoretically you could also take it back off and give the market a little bit more room, depending on how you're trading. And if you're using a tight trailing stop, then obviously we would have been out of the market right here from that move, which again, not a bad trade. Market goes sideways. So your exit point here was just fine. But as a reverse signal, that was not valid any longer after this happened. Only your exit was valid. Okay, so let's move on to, to finish crude. We're not sure where this is going. It does look like there's a possibility they have some more room to go to the upside here. I'm going to take you up to a weekly chart real quick just to see. We have been in a long-term correction, so this has been difficult. The market comes up, makes a new high and a fractal, pulls down, we have another fractal, a degree of Elliott wave in between. We go up, a fractal, degree of Elliott wave, down fractal, and now, right now, we're still in the mouth and transitioning here. So we don't know what's going to happen. If this market's going to continue like the self-similar repeating patterns, it's a good possibility it's going to come up and continue for a little bit of time. So on the daily chart, if you're long, I would keep a stop somewhere in this area, and if we get a strong bearish divergent bar, I would definitely pay attention to that. Okay, the next market we're going to take a look at is going to be soybeans. For those of you that like to trade this chart is an absolute mess. Very difficult to trade, difficult to interpret. You know, I prefer to try to find something else. One of the beauties we have in trading is that we don't have to trade just one certain particular market. When these markets go into a correction or have this behavior that's difficult, we have the luxury of looking at other markets that may have better behavior. So at this point, you may want to take a look at something different, something like wheat. Now, if you haven't been in this and you look at it and go, you're sad, don't worry, there are other charts. I just want to show you that to be flexible in these sectors, instead of trading soybeans, you may trade meal, or you may go to wheat, or you may look at corn. So flexibility. This wheat trade has been a beautiful trade outside the gator's mouth for quite a while. You can see we had a 3, 4, 5 divergence. If we go up to a little bit larger time frame, we're looking at this whole wave sequence here. Alligator still open, AO's below 0. We just took out another sell fractal. So back to the daily. There's a possibility that this market is going to continue. We don't have divergence on the current wave. This is our highest peak. Well, I guess we do have divergence here. I'm sorry. We do have divergence between here and here on the current wave, but everything says that there's still some room to go. Now, also notice that the alligator is kind of sideways more in this parallel. It's not like a wide open to the bottom. So this is a slow move that's continuing on. So if you're not short this market, it may be a little late, but if the risk is okay, you may get another pullback and an opportunity to get in. But just remember, we want to have some flexibility. If one of the markets you're trading has gone into a correction looking like this in the soybeans, then we may want to wait till outer fractals brackets, or the market has broken these outer brackets here, and in the meantime look at something else, or just don't trade it. Okay, so the next market we're going to take a look at is going to be S&P. Now let's go ahead and look at the monthly chart. So as we have talked about before, we weren't sure what was happening, but the S&P, definitely the Elliott wave, told us what was happening, that this is a new wave, that this was an A, B, C, and the market is continuing up. Now at this point we don't have any divergence on the AO. Our peak is still the tallest. We go to a weekly, we can start to see some divergence here. So of course the weekly is going to show divergence before the monthly is. And we go to the daily, and we can see that we've already started. This is the correction of the smaller time frame on that. So I'm going to switch back over to the S&P E-mini. So we can see currently on the daily, the market has gone into the A wave. It was the strongest move that we've had so far. We don't know if this is the bottom of A or not. For those of you that trade smaller time frames, the 4-hour chart is a possibility. That's very clear when you're looking at this correction, and dangerous. And then of course the 30-minute time frame is probably my favorite if you're going to be intraday trading, and you can see that this market has some very nice moves on the intraday. Clear fractals, alligator wide open. We've got some really nice divergent bars on some of these bottoms. Here's a beautiful example of a divergent bar with angulation. Surprisingly, there wasn't one here on this bottom. We have a bearish divergent bar here on the top with angulation, and we have none here. We also have another one here. You see the distance between the bottom of this bearish divergent bar and the alligator this far, that rubber band effect. So on the 30-minute, of course, you see 5 waves completed. You see a 3-wave correction. You see another 5 waves. We see a correction, another 5 waves. So you see inside of inside a little more clearly here, but also notice that the range of these bars has been quite large. So that does tell you we're in a corrective move. So for those of you that are new to trading or not into the higher risk, it may be a time to be a little more careful, be conservative. Just for example, the risk on this bearish divergent bar here from the high to the low was $237. So that was very easily handleable as far as an entry trade, an entry-level trade. This bar here was $312. So even though they look large on this chart, they're not as expensive as they may look. So this is an intraday chart, again, just for you to look at if you're not trading the larger time frame, which I suggest during corrections if you can. Sometimes these smaller time frames will give you the ability to be more flexible, have less risk, and take profit quickly. It's important, and I keep mentioning this, until we have significant trends, a lot of the markets we're trading have been in larger degree corrections on the weekly and monthly chart. And so we need to be able to take money off the table. If you're approaching the market as if we're in a trending market and trading in that manner, and it's a correctional market, you're going to be losing money. We want to make sure that we look at the market in the way that it is. So when the market is in a correction, we want to be quick to take our profit. When the market is trending, we want to allow it to breathe and use the green line. Wait till we see some divergence on the AO, things like that. Use the other factors. So just make sure that you're in defensive mode when you need to be and offensive mode when you need to be. Don't take any risks that are not in your risk parameter. Try not to project your opinion on the market. Let the trades and the market tell you what to do. May all that you wish for be the least that you receive. Namaste.